And to show you guys how big of a problem this is, there's $2.7 trillion worth of commercial debt maturing between now and 2027. I want to say 2025, around $900 billion is maturing this year. Now, that's a concentration between office, retail, industrial, multifamily, all of it across the board. But here's what this does. If you're a developer, you're a builder, and you need to build, we're looking to buy existing stuff. We only buy existing properties because we want cash flow from day one. But if you're a developer, you ain't going to go get the debt for that. You cannot get the financing. It doesn't pencil, which means that any new construction that is being completed between now and 2027 or 2026, that's it. There's not going to be any more new construction coming on. And if that gets absorbed, which it will, or it gets waited on because they aren't going to continue to press forward with this, like there's going to be a supply and demand issue, which is going to make rents skyrocket. If you watch any of my other videos, I talk about rent in this country in multifamily real estate, A-class properties, A locations, great properties. That rent is going to skyrocket because there's going to be a supply and demand issue. There's not going to be enough units coming on to deal with the demand of rentals, right? Because, like I said earlier, people in single family houses are not going to sell. You have a 30-year fixed rate, 3% interest or 4% interest, and now the rates are 6 and 7. There's no need for you to sell, and that's locked in for 30 years. There's not going to be this high concentration of people running to sell their homes. But there is a glut of inventory of multifamily real estate for people who are sellers who got a deal in 2018, 2019, who their rates are on adjustable rates because whoever their investors are, they're probably not retail investors like ours. They're institutions. They're CalPERS, they're the state pension funds, the fired pension funds, they're endowments like Harvard Endowment. Like every 5 years, they need to recycle a wealth machine. They need to refinance that money. And if they can't do it, they're going to hold off for about a year and then they're going to have to do something. So they're going to sell at a loss. So if that is what's happening, the debt needs to get handled. The interest rate climate in this country needs to get handled. So here's what that'll do. Insurance costs will come down. Taxes will start to get paid by people who are stuck not being able to do those things. So like, because all that's going to happen is they're going to lose. They're going to kick the keys back to the bank, or they're going to refinance at a lower cost, and they're going to write down their portfolios, which is what we're hoping we can get some of those assets. And as they write down their portfolios, they're showing a loss. It's money they don't have to pay. So at some point, all of this needs to be handled. But what I want you guys to remember, $2.7 trillion worth of commercial real estate debt that's maturing over the next 3 years shows a massive opportunity in the multifamily space, which I plan on taking advantage of. Every time I get pumped up, man, my pocket folder goes down. So, like when we're looking at an apartment building, number one thing I'm looking for from a seller or from a deal coming on the market, urgency. Now, I'm in San Diego County. We look in Orange County, Irvine, that area, that stretch corridor of Southern SoCal. There's not a lot of assets coming to market, but what there is urgency based on the debt on these assets that either they're going to refinance, bring in new investors that want to be involved in that, or they're going to have to sell this property, and they're not selling at a loss per se, but they are selling at somewhat of a compromised price, 20 to 30%. And 100% they're all selling below replacement cost, which is one of our things. Hey, if we can get below replacement cost on a cash flowing asset at an A location, that's a great thing. And there needs to be some type of urgency on the seller that forces him to compromise his price. That's what I'm looking for. So with this new administration with Trump, that's what I'm assuming they're going to have to focus on. Number one, Trump's a debt guy. I mean, Trump's a real estate guy. All real estate, good real estate, has debt on it. It has debt on it, and it has long-term debt on it. Long-term in commercial real estate is 5, 7, 10 years, and then they reset that clock every 5, 7, 10 years. Sometimes 3, but nobody wants 3-year debt. Usually they'll go 3 years with a 1+1, which is 5 years, and they have an adjustable rate on that the whole time, right? So why does this matter to you guys? As you guys can see, they're talking about what's happening right now. He's signing stuff in, but I know that this is going to come up. One, insurance is going crazy. Insurance costs are ridiculous right now. California had its fires in LA. North Carolina had its floods. Florida had its storms. Texas has its freezing. Insurance costs across the board is going up on everybody in this country. And that is also associated with the debt market. finance, debt, interest rates, all of this stuff with all these premiums that need to be paid out by these big insurance companies. At some point, financing and debt and all that stuff, it comes into play. It has to. So this is something that's good for you guys. This is good for investors. Inflation, all this other stuff, but a lot of these assets that we look at for investments are always tied to debt. It's tied to the interest rates. It affects people who can build. It affects people who can buy. It affects people who can refinance. That in turn, my friends, affects investors and what they can do or what they can do, man. If you take a look at it, that's what's happening right now. So if you're an investor like me, this is what I'm looking for. I'm like, hey, man, what's going to go on with the interest rates? Because if the interest rates come down too dramatically, prices are going to skyrocket on commercial real estate. Nobody's going to buy. Everyone's going to wait. If prices come down too slow, it strangles the owner currently now and their debt and their timeline and their investors, and they're going to exit the deal, which is where the opportunity is. That's what we want. Slow, methodical, lowering of the debt, lowering of the interest rates, giving access to this glut of properties that's sitting on companies' balance sheet, multifamily properties that could come to market that they won't because they have to run a process, meaning they got to come to market, they got to show this, they got to go back to their board, they got to go back to their investors and say, here's where we are. Like that's what we're the game that I'm playing right now. And in 2025, I believe the biggest opportunity is presenting itself. Why? Because interest rates are going to lower. We have a new administration that's taken over. Taxes are going to be lowering. I believe in the real estate side of the industry more than any other one. I believe real estate, the taxes on the real estate side are going to be the best. Why? Because Trump's a real estate guy, right? And he understands this game. The red tape's going to go away. The taxes are going to come down and the deals are going to loosen up. So the initial part of this, of the United States, stimulation of the economy is probably going to come through real estate. It's going to come through the housing market. And if you're not willing to take advantage of the housing market on the housing side, on the real estate side, on the rental side of institutional quality assets, big properties, then you will get left behind. I believe that's going to be the start of where, aside from the other stuff, that is going to be the untying of all knots. It'll start there and work its way out. Are you an accredited investor with $300,000 or more liquid in the bank? I want you to come and partner with me. Look, if you love real estate, passive income, and positive cash flow, appreciation over long periods of time, and you're willing to be patient, come invest with me. Go to bell-capital.com. This is for accredited investors with $300,000 or more in the bank, ready to go. Come invest with me. Go to bell-capital.com.